Welcome to Financial Balance. It's important to set up your company and that you understand how to balance it financially so that you have the profit that you want out of your company. So, of 100% of sales for my parts, I have 18% of the money coming in to spend on parts. So, if I do $1 million, I have 180,000 to spend on parts, and I don't do that by saying all I have is 180,000. I do that by using a parts matrix, which I think is one of our first tips. And that's going to give me, if I do this correctly, and parts is about 45% of my sales, that's going to give me a 58-ish percent profit margin on my parts. So this is percentage of cost, and this is margin. And then I'm going to have labor, which is my tech labor. I do loaded labor, which means all the costs of labor, FICA, FUTA, workers' comp, PTO, holidays, medical, dental, whatever I'm paying for my techs, I add that in, and I have 20% of my sales to pay out for my tech labor. So again, if I do $1 million, I have $200,000 loaded, which would include all the costs of labor. And if my labor is about 55% of my sales, that's going to give me a 62-ish margin on my labor. So after I pay for the labor, what's left is 62% of my labor, of my sales. So that is what we call above the line cost. So that's the line, and these are variable expenses, meaning that if I don't do any work, that's the variable. And so in accounting terms, I have above the line variable expenses, and that's going to give me my cost of goods. And my cost of goods is going to be 38%, and my overall margin is going to be somewhere in the 60% range. Gross profit is going to be 62%. And that would be with a loaded labor. If I'm unloading my labor or I don't have the load in, then I need to be somewhere around 74%. That's the money left over. So I bring in $1 million, I pay out $180,000 for parts, I pay out $200,000 for labor. That gives me a $380,000 cost and a $620,000 profit. That money's still here, gross profit. And then I have expenses. Typically, if you're going to work with a consulting company, we're going to break your expenses into like 12 areas. Banking costs, debt, management salaries, sales costs, marketing costs, vehicle costs, building facilities costs. But for today's purposes, to keep it simple, we're going to divide it into 3 places. One is going to be my marketing cost. So marketing is going to be somewhere between about 6 and 9% of sales. So I have $60,000 to $90,000 to spend on my marketing to bring the right customers in so that I can do whatever amount of business, $1 million, $2 million, whatever it is. Then I have sales cost. Whoever is selling my service to my clients, and that's going to be between 8 and 10% of sales, overall sales. So I do $1 million worth of sales. I have $100,000 to pay a service advisor. If you're more productive, you can pay more, but if you're not, you can only pay that. And then, last but not least, I have the rest of my fixed expenses. And that would be the banking costs, myself, my salary, any management people, any support staff, the facilities costs, the gas, the insurance, all of the rest. And we want that to be 25%. And then we have our net profit, and we want that to be between 20%. That would be normal. So that's my goal and my target, to 24% in general. And we could be higher if we do this correct. So this financial balance is kind of the basis for my budgeting and for how I run my business financially. Stay tuned for number 2, where we'll talk about where things go wrong for shops.